Imagine a world where a small group of people can control the value of your hard-earned savings. A world where money is printed endlessly, making your purchasing power shrink every single day. This isn't a dystopian fantasy, this is our current financial reality, dictated by central banks and governments. For centuries, we have placed blind trust in institutions. We trusted them to store value, to manage the economy, and to act in our best interest. But time and again, the system has proven fragile, riddled with debt, manipulation, and inflation. The fundamental flaw? Our money is centralized. Every major financial crisis, from the 2008 meltdown to today's inflation crisis, stems from this core problem: opacity and control. But what if there was an alternative? A digital asset, resistant to inflation and immune to government intervention. That alternative is Bitcoin. It's not just a digital asset, it is a fundamental shift in how we define and exchange value. Bitcoin is the technological answer to a historical problem. And in the next 14 minutes, we will explore exactly why it is destined to become the future of money. Let's break down the four core pillars that make Bitcoin a superior form of currency. These are the properties that fiat money, like the dollar or euro, simply cannot replicate. The most crucial difference between Bitcoin and fiat money is its supply cap. There will never be more than 21 million Bitcoin. This is written into its code. Fiat currency, on the other hand, can be printed infinitely by central banks at the push of a button. When central banks print money, they inflate the supply, devaluing every existing dollar or euro. This is the hidden tax of inflation. Bitcoin is anti-inflationary by design. Its scarcity mirrors gold, but with the added benefit of being digital, verifiable, and globally transferable. Because it is mathematically verifiable that the supply cannot be changed, Bitcoin is the hardest form of money ever created. It guarantees that no authority can manipulate its value by flooding the market. Bitcoin runs on a distributed network of computers called the blockchain. This means no single person, company, or government has control over the network. It's a system run by math, not by men. If a bank goes down, your money is inaccessible. If a government shuts down, the financial system freezes. If one computer running the Bitcoin network fails, thousands of others are still running the ledger. This resilience makes Bitcoin practically impossible to stop. Decentralization is not just a technical feature, it is a feature of freedom. It ensures that money remains outside the direct political power structure, a true check and balance on financial authority. In the current system, banks can freeze your account, seize your assets, or block transactions if they disagree with your politics or decisions. This is financial censorship. With Bitcoin, as long as you have your private keys, you control your wealth. No government, no bank, and no corporation can stop you from sending Bitcoin to anyone, anywhere, at any time. It operates beyond borders and beyond political whims. This is why Bitcoin is a lifeline for people living under authoritarian regimes, or for businesses operating in countries with heavy capital controls. It is truly permissionless money. When you use a bank, you trust them. When you use cash, you trust the government backing it. Bitcoin removes the need for this human trust entirely. All transactions are verified and recorded on the public ledger, the blockchain, by computers using cryptography. The math guarantees the transaction happened and that the Bitcoin is legitimate. We trust the code, not a CEO or a politician. This trustless nature reduces fraud, eliminates intermediaries, and ultimately makes the system faster, cheaper, and fundamentally more honest than any traditional financial network. So if Bitcoin is so superior, why isn't it the future of money today? The journey of adoption is underway, driven by two major factors: institutional acceptance and global necessity. Major players like BlackRock and Fidelity launching Bitcoin ETFs or exchange-traded funds signal a massive shift. They're bringing hundreds of billions of dollars from traditional finance into the crypto space, legitimizing Bitcoin in the eyes of the world. Nations with unstable currencies, places like Turkey, Argentina, and Nigeria, are seeing their citizens increasingly turn to Bitcoin as a practical store of value. When your local currency fails,
you seek sound money, and Bitcoin is the most accessible sound money globally. The argument that Bitcoin is too slow or inefficient is becoming quickly outdated. Technologies like the Lightning Network are being built on top of Bitcoin, allowing for instant, nearly free transactions, faster than Visa and cheaper than Venmo. Bitcoin is evolving from a store of value to a medium of exchange. Companies like PayPal and MicroStrategy are integrating it into their daily operations. Governments are beginning to understand that they cannot ignore it. They must integrate it. The transition won't be immediate, and the road will be volatile, but the path is clear. The world is moving toward decentralized, permissionless, and inflation-resistant money. History shows that better technology always wins. Of course, critics still raise concerns about volatility, energy use, and regulation, but these are all temporary, solvable issues associated with any emerging technology. Volatility fades as liquidity increases. Energy use is shifting rapidly toward renewables, and regulation is simply acknowledging its existence. Ultimately, the future of money is not about the banks or the governments. It's about the users. It's about you having absolute control over your financial destiny. Bitcoin is a tool for self-sovereignty, a global, digital currency for the internet age. Thank you for joining us on this deep dive into the future of finance. What do you think? Is Bitcoin truly the future of money, or is it just a passing trend? Let us know your thoughts in the comments below. If you found this analysis insightful, please like this video and subscribe for more deep dive financial content. We'll see you in the next one.